Hello, hi, namaskar to all the students of CA Foundation. See, my dear student, recently we started the chapter 4 of our CA Foundation, that is inventory, right? In that, one class is already being completed wherein two problems are being solved. Remember, when we have to use the historical cost of inventory. When to use the historical cost of inventory? We have to use the historical cost of inventory when the closing stock is given at what price? Selling price. We have to use the adjusted selling price method, that is historical cost method. Always remember, regarding historical cost, this is your trading account. On the debit side, opening stock, purchases, direct expenses. Credit side, we will be having a sales and closing stock. What to do? Take the sales and closing stock, add both. You subtract all these items out of this. That will gives you an amount of called gross profit. Okay? Because trading account is prepared to ascertain the gross profit, right? Credit incomes minus expenses will gives you the gross profit. See what happened here in this particular problem. It is a illustration 6 from our CA Foundation. XYZ are in retail business. Following information is obtained for a year ended March 2020. See, goods received from supplier. What do you mean by goods received from supplier? It is nothing but purchases, right? ट्रेड डिस्काउंट दिए, ट्रेड डिस्काउंट क्या करना? परचेजेस में माइनस करना. Then we have a tax. Tax is to be added to the purchases. As you know very well, from purchases we have to subtract the trade discount and the tax is to be added to the purchases. Packing and transport expenses is your direct expenses, my dear student. Sales is given. Okay. Sales price of closing inventory means what? Closing stock is given at selling price. When my dear student, closing stock is given at selling price, we have to apply the historical cost method. Find out the historical cost of inventory using adjusted selling price method. Shall we write? That is using historical cost method. According to this method, we know very well we have to take sales plus closing stock at selling price. Closing stock is nothing but closing inventory, right? What is the amount of sales? 22,45,500, very big number. 22,45,500 plus apart from that we have a closing stock. Sales price of closing stock 2,35,000. Use a calci, add both. When you add both, we are getting 24,80,500. Okay. From this, my dear student, see here you have taken what? You have taken what? You have taken sales and closing stock. From this, what we have to subtract? We have to subtract the opening stock. Less opening stock or opening inventory. It is not given in the problem. Opening stock is not there. Then what we have to take? Then we have to subtract less purchases. Purchases means here goods received from suppliers. How much goods are received from suppliers? 15,75,500. 15,75,500. From this, my dear student, there is a trade discount of 3%. What to do? From this, we have to subtract less trade discount. What percent? 15 lakh, 15 lakh 75,500 into 3%. Use a calci and work out. It comes to rupees on this 47,265. After subtraction we get 15 lakh 28,235. यूज ए कैलसी एंड वर्कआउट. बाद में क्या करना, ट्रेड डिस्काउंट तो सबट्रैक्ट हुआ, बाद में क्या है, टैक्स है. कितना परसेंट टैक्स है, 11%. टैक्स क्या करना, वी हैव टू ऐड ऑन व्हाट, 15,28,235 into 11%. It comes to 1,68,106. After adding this, we are getting 16,96,341. This is your purchases, my dear student. We have to subtract 16,96,341. So we have, there is a no opening stock, there is a purchases. For purchases, what we have to do? We have to subtract the trade discount, we have to add the tax. That is your net purchases. So now purchases over trade discount. Packing and transport expenses, it is called what? Direct expenses. What to do with the direct expenses? We have to subtract less direct expenses, that is packing and transport. How much packing and transport in the problem? It is an amount of 87,500. Fine. Fine. So we have taken direct expenses also. So purchases is taken, this one is taken, packing direct expenses taken, sales and the closing stock at selling price is also taken. Now what we have to do? You subtract all these items out of 24,80,500. The answer, whatever you are getting, that answer is called, my dear student, as the gross profits. How much it is? 6,96,659. When once you got gross profit, you take this gross profit, you take this net sales into 100. That is a rate of gross profit by net sales into 100. Gross profit 6,96,659 by net sales is 24,80,500 into 100. That is, my dear student, this is the gross profit, this is the net sales. Okay, as we learnt in previous classes, we are going to get the rate of gross profit as 28.0854%. Then we have to write historical cost of inventory. For that, closing stock at selling price minus rate of GP on selling price. What is closing stock at selling price? 2,35,000 minus 2,35,000 into 28.0854%. 2,35,000 minus, use a calci and work out a percentage of this. It comes to rupees 66,000. You subtract it, we are getting 1,69,000. This is the amount of closing stock. Did you understood in the third problem, class 2? Did you understood how to work out? This is the rate of gross profit, this is the value of closing stock. I hope you got it right. Let me move on to the one more problem in the same class itself. A very simple and small problem. This is a problem from JK Shah material, my dear student. Here purchases the ट्रेड डिस्काउंट है, ट्रेड डिस्काउंट क्या करना, परचेजेस में माइनस करना. टैक्सेस है, परचेजेस को क्या करना, ऐड करना. देन पैकिंग इज योर डायरेक्ट एक्सपेंसेस. देन सेल्स एट सेलिंग प्राइस इज योर सेल्स. Closing stock at selling price is given. When closing stock at selling price is given, we have to use what method? Historical cost method. What we have to do? Calculate the value of closing stock. How to calculate? We know very well. This is your trading account. Here we get sales, closing stock. Here we get opening stock, purchases and direct expenses. When you people subtract all these out of this, we are getting an answer called gross profit. Shall we try to attend for this? That is using historical cost method. Start your problem with sales plus closing stock at selling price. What is the amount of sales? Sales is 2,70,000 plus 30,000. 2,70,000 plus 30,000. It is of how much, my dear students? It is an amount of 3 lakhs less. What we have to subtract? We have to subtract the opening stock. Tell me, do we have any opening stock in the problem? No, it is not given. So we have to put the dash. Less. What is there? Purchases. How much goods you purchased? 2 lakh rupees. Take the 2 lakh. In that we have to subtract, nodi, less ge less. We have to subtract trade discount. Trade discount is how much? On the amount of 2 lakh, it is of 10%. Discount is trade discount only, nothing else. It is of 20,000. So we are getting 1,80,000. बाद में क्या है? Tax. कितना percent tax? 5%. So we have to add tax. On what? 1,80,000 into 5%. It comes to 9,000. When you add both, we are getting total of 1,89,000. This 1,89,000 is to be subtracted out of your net sales. मालूम हुआ? Purchases, discount minus tax plus. बाद में packing है. Packing comes under what heading, my dear student? It comes under direct expenses as a packing. How much packing is given? 21,000. Subtract that 21,000. See whether you left out any items. Purchases we have taken, discount, tax, packing, sales at selling price, closing stock. All the items are taken. Now my dear student, you work out a balance. That balance is called what? It is nothing but gross profit. How much gross profit? Out of 3 lakh, you subtract all these, we are getting a gross profit of 90,000. Okay. Now how to work out a rate of gross profit? For the rate of gross profit, you take the amount of gross profit divided by net sales. That is next concept in the next page. Rate of gross profit by net sales into 100. How much gross profit? 90,000. Net sales 3 lakhs. So 90,000 divided by 3 lakhs into 100. It comes to 30%. Right? What percent it is? 30%. बाद में क्या करना? That is historical cost of inventory. How to work out historical cost of inventory? Closing stock at selling price minus rate of GP on closing stock. What is the closing stock at selling price? It is of 30,000. Okay. What is the rate of GP? 30%. 30% on what? 30,000. So 30,000 minus 30% of 30,000 is 9,000. So now the historical cost of inventory will be 21,000. I hope you got it, my dear students, right? This is all about two problems in class 2. Totally 4 problems are being covered. In the next session, we are going to solve the different type of problems under inventory. Okay, take care. Bye bye. Namaskar. All the best.